Hey Marge, what's with all those rubbish housing policies? I could give those nuffers 10 better policies. Maybe they can stick them in between more transparency and supermarket reform. It starts with occupancy, Marge, and I'm so glad you asked. It's a little thing I like to call target occupancy. So we have 2.6 people per household in Australia, but half our population comes from way more crowded countries. Do the numbers march? At just 2.8 people per household, we could fit in 2 million more people without building a single house, and we can't do this if no one wants to effing sell. So then, Marge, all we need are incentives to do that. Here's one incentive they can have for free. I like to call it the Fomo capital gains tax discount roller coaster. It's so easy. Just increase the capital gains tax discount to 100%, but only for 2 years and only on properties that people already own. After that, just keep the capital gains tax discount Fomo roller coaster going. All they have to do is keep pulling this lever back and forth between 50 and 100%, like some rando who has no clue what they're doing. Just watch those investors try and time their exits. Fomo is a cruel mastermark, but watch it sort out the housing supply now. Here's another easy one that I like to call quarantining pensioner assets when downsizing. Now, Marge, old people have become just like squatters in their own enormous homes just to keep their effing pensions. This is literally the only effing reason thousands of them are still in those big homes. I swear, Barry and Beryl wander around for days without seeing each other. So let them downsize 20 years earlier and quarantine the price difference from the assets test. The government wasn't going to get their grubby hands on it anyway, and this puts more family homes on the market. Here's another brilliant idea, Marge. Not effing grandfathering negatively geared properties. If any of those pollies are thinking of strapping on a pair and doing something about negative gearing, then consider the fact that 25% of investors who have investment properties plan to hold them for 15 more years. So don't let it come to this. These homes are already not part of the property market because of their massive accumulated capital gains tax liabilities. CGT is also a huge killer of turnover and an enemy of the natural order of occupancy levels. But since the government is still happy for investors to endlessly keep profiting from the taxpayers' portion of unrealized capital gains tax on these long-term investment properties, then just effing give it to them as a full 100% CGT discount for a one-off sale, as long as they do it in the next 3 years. Then put them onto the CGT roller coaster after that. And if that doesn't work, then put them on the CGT Vomitron. Okay, I'm on a roll, Marge, so let's make it even easier to sell a house. Here's a little thing I like to call transaction cost rebates. Did you know that the more frequently properties change hands, the more they will reflect the occupancy needs of the population? Therefore, young Marjorie, transaction costs could be rebated by the federal government to keep established housing stock moving. It's gotta be cheaper than all of those other effing giveaways. Just pick up the phone and figure it out with the states. Who's that housing minister? Okay, hang on to your hat, Marge, because I'm about to get technical. I know you're very interested to hear what I know about cross-collateralisation and valuation transparency. Now, Australian borrowers are so well protected by credit laws, they've been completely protected from owning an effing home, going all the way back to when they might have actually afforded one. And it doesn't help that it's easier for banks to lend to investors because of a dirty little secret Marge. It's a total carve-up. Now, since interest rates are higher on loans with higher loan-to-value ratios, then a borrower's borrowing capacity should be an asset of that borrower and not of the freaking bank. Now stay with me on this, Marge, because if you don't have the brain power for this one, I'll give you a cheat at the end. Now the banks steal borrowing capacity from investor-type borrowers who want to build new investment properties. They do this by cross-collateralizing the principal place of residence without the borrower ever seeing the valuation of the investment property. Did you know that, Marge? Neither does anyone else. It's an effing travesty. If these mum and dad investors did see the valuation, they'd also see 50k worth of assorted commissions that didn't make it past the valuer but are now secured by their family home. So the theory is, Marge, valuation transparency would reduce these dodgy-ass practices. These are so ingrained in the property sector that nobody even notices, unless your name's Bob, of course. So lending against and securing against only the investment property could reduce the inflationary effect of developers achieving overpriced sales through dodgy networks that look a lot like respectable accountants and financial planners. It wouldn't stop them using lines of credit, but for fruit's sake, stop leveraging the hell out of these poor saps when they can't see it coming. This could easily lead to less young people having to bid against sucked-in, speculative mum and dad investors. And if the cross-collateralization part sounds too hard to explain to the crossbenchers, then just solve half the problem by making it mandatory to disclose bank valuations. Now, Marge, here's another policy that helps people buy a home without driving up prices, but only when used as intended. I repeat, only when used as intended. I like to call it loan-to-valuation ratio control. Now, when I told the Morrison government they should introduce a deposit guarantee to eliminate lenders' mortgage insurance costs, I didn't mean for them to use it to maximize loan-to-value ratios at the same time, but to instead to take the levers of loan-to-valuation ratios that I had just gifted them back from the mortgage insurers, and to use those levers to balance supply and demand. Maybe they didn't get my memo. In any case, don't waste the deposit guarantees by driving up prices with those ridiculously high LVRs. It's a lever for goodness sake, not a panic button. Now here's one for those guilt-ridden boomers. Do you know any of those, Marge? I like to call it the gift that keeps on taking. Why can't pensioners give partial home deposits to young family members without counting as gifts for the purpose of calculating the pension? I mean, for fruit's sake, the statutory interest that the government would miss out on would be a fraction of the cost of another inflationary misguided homebuyer grant scheme. I'm looking at you, every state and federal government since the dawn of time. Now, Marge, onto those sketchy developers. Do you want to hear about developer covenants? I thought so. Did you know that new land sizes are now so small we need to go to much more expensive two-story construction methods in most new estates? Yet most new houses on small blocks waste up to 40 square meters in the dead space between the homes. So instead of this, how about encouraging more affordable single-story homes with party walls like we had in the olden days? And don't let developers inflict size covenants and building envelopes onto everyone, just to keep the peasants out and to prop up the land prices. Am I right, Marjorie? And finally, Marge, don't build new houses with first home buyer incentives. No government has ever not screwed this up. Well, I guess that's more of an anti-policy. So there you go, Marge. 10 housing policies that are better than any that those nuffers in Canberra are planning. Too bad they're not a fly on the wall, I guess.